This video is brought to you by BlackNote Investment, the equity research platform where you can find all the necessary data for company valuations. The IT service industry comprises all those companies providing a broad range of information technology services aimed at helping other businesses achieve higher degrees of efficiency and effectiveness in their day-to-day operations by leveraging their professional knowledge and expertise to deliver insights and recommendations tailored to the needs of their clients. Examples of services and solutions offered by IT service firms are strategic consulting, system integration, hardware and software development, cloud infrastructure, network support, business process outsourcing, data management, and cybersecurity. The IT services industry is divided into three main segments: the consulting and digital transformation segment, the cloud and infrastructure services segment, and the industry-specific platforms and solutions segment. The consulting and digital transformation segment comprises companies which provide consulting services to help businesses implement digital technologies to enhance their operations and efficiency. The services and solutions offered in this segment include strategy consulting and advisory, helping clients create digital transformation roadmaps by selecting the right technologies that would best fit clients' goals. Process automation, to automate repetitive tasks and improve clients' operational efficiency. Enterprise architecture, helping clients design and optimize IT infrastructure aligned with their business goals, ensuring scalability and flexibility. Cybersecurity, to develop and implement strategies to protect clients' assets, manage risks, and ensure regulations compliance. Examples of publicly traded companies operating in the consulting and digital transformation segment are Accenture plc, Capgemini SE, Infosys Limited, Wipro Limited, HCL Technologies Limited, CGI Inc., and Cognizant Technology Solutions Corporation. The cloud and infrastructure services segment comprises companies which provide cloud-based solutions to help business enhance their IT infrastructure. The services and solutions offered in this segment include cloud migration, assisting businesses in migrating their application, data, and workloads from on-premises servers to the cloud, ensuring a smooth and efficient transition. Cloud management, helping clients manage and optimize cloud environments by monitoring performance and costs on an ongoing basis. Hybrid cloud solutions, helping clients leverage both cloud providers and on-premises cloud solutions for better performance and flexibility. Data center services, to help clients collocate, host, and manage data centers. Network infrastructure, managing network solutions, ensuring their clients safe and reliable connectivity on premises and outside clients' facilities. Storage solutions, help clients safely and efficiently store data. Examples of publicly traded companies operating in the cloud and infrastructure services segment include IBM, NTT Data Group Corporation, Kyndryl Holdings, Inc., DXC Technology Company, Fujitsu Limited, Samsung SDS Co., LTD's Computer Center plc, and Snowflake Inc. The industry-specific platforms and solutions segment comprises companies developing tailored solutions suitable for specific industry needs. Sectors like banking and insurance, healthcare, retail, manufacturing, energy, telecommunications, and public services all have their sector-specific needs and regulations to comply with. Companies operating in this segment, like Infosys Limited and Tata Consultancy Services Limited, developed a comprehensive set of solutions implemented by an experienced team of professionals to effectively tackle the specific needs of their clients operating in different sectors. Other than the three main segments, the IT services industry is populated by a constellation of relatively smaller companies offering technology solutions, usually software applications, aimed at satisfying specific clients' needs. In this category are included companies like Shopify Inc., offering e-commerce solutions enabling its clients to set up online marketplaces, Twilio Inc., which offers customer engagement solutions like email and messages to improve customers' experience and retention, Okta Inc., which offers access management solutions enabling its clients to have full control on individuals accessing the corporate network, and VeriSign Inc., operating in the domain segment. Despite the presence of a few large players like IBM and Accenture due to the rapidly changing environment driven by the quick adoption of new technologies and relatively low barriers to entry, the IT services industry is very competitive, registering a Herfindahl-Hirschman index HHI index of 0.43 or 427.6 points. The Herfindahl-Hirschman index is used to measure the level of competitiveness or concentration in an industry with HHI below 0.15, indicative of unconcentrated or very competitive industries. HHI between 0.15 and 0.25, indicative or moderately concentrated industries. And HHI above 0.25, suggesting that industries are highly concentrated or scarcely competitive, like oligopolies. From 2013 to 2023, the industry's revenues grew at a CAGR of 4.3%, increasing 1.53 times from $378.3 billion to $578.1 billion. As of 2023, the industry's operating margin stood at 10.7%, reflecting inline performance with the industry median value of 10.9% of the past decade. The total operating profit was $61.7 billion in 2023. Looking at other measures of profitability, in 2023 the gross margin sat at 33%, in line with the median value of 32.8%, while the free cash flow margin was 6.4%, again in line with the past decade's median value of 6.5%. Collectively, in 2023, the free cash flows to the firm registered a value equal to $36.7 billion. As regards solvency ratios, the debt-to-enterprise value ratio for the IT services industry is 5.6%, while the debt-to-equity ratio is 18.2%. The interest coverage ratio instead, showing how much the operating income covers interest expenses, is equal to 9.51, which would translate into a credit rating for the IT services industry equal to AAA based on Moody's rating standards. Finally, the unlevered beta of the IT services industry, which is the beta depurated by the debt leverage, has been 0.72 for the past 2 years and 0.77 for the past 5 years. Thanks to the rapid emergence and evolution of new technologies which disrupt and influence the way enterprises do business, the IT services industry can rely on numerous catalysts to boost future growth. The secular megatrends shaping the industry are digital transformation and automation, the rapid development of AI and robotic process automation, enabled firms to improve the efficiency, effectiveness, and safety of their business processes. Edge computing, enabling IoT integrations and real-time processing of data in industrial and urban environments to improve process efficiency and repetitive task automation. 5G, empowering firms with faster internet connectivity to support real-time data processing. Cybersecurity, like zero trust architecture where no user or device inside or outside the network is trusted by default, aimed at protecting firms' assets and improving risk management. Big data, permitting data-driven decision-making, real-time analytics, and predictive analytics, improving firms' strategy planning and budgeting. Blockchain technologies, improving trust among economic operators and eliminating the need for intermediaries thanks to supply chain transparency, digital identity, smart contracts, and DeFi. Industry 4.0, comprising operational efficiency and profitability improvement driven by new technologies such as advanced robotics, 3D printing, and IoT predictive maintenance. Remote working, relying on collaboration tools, virtual reality workspaces, and VPN for secure connection to the enterprise network outside of firms' facilities. Although the blossom of new and disruptive technologies benefits the IT services industry, over the past years, concerns for data protection and individual privacy protection have risen among governments and international institutions. This led to the introduction of stringent regulations and frameworks that IT services companies must comply with to ensure the protection of both their clients and their clients' customers' data and information from any potential threat. Examples of regulations firms are obliged to comply with are data protection and privacy regulations, like the EU GDPR and the Californian CCPA. Cross-border data transfer regulations, like the EU-US Data Privacy Framework, providing a detailed mechanism for the transfer of personal data from the EU to the US. Cybersecurity regulations, a set of policy frameworks for computer security on how organizations can prevent cyber attacks, like the NIST Cybersecurity Framework and EU Network and Information Systems Directive. To capitalize on such opportunities, over the past decade, collectively the industry registered a median reinvestment margin of 3.4%, which comprises investments made in capital expenditures, R&D, and acquisitions. In terms of efficiency and return on investments, the IT services industry median sales to invested capital in the period 2013-2023 is equal to 1.85, meaning that on every dollar invested, the industry generates 1.85 of revenues. Combining both the reinvestments made through the past decade and the industry's ability to generate a return from the investments made, the 2024 expected growth rate for the industry is 8.7%. A detailed explanation of how we came up with the industry's expected growth rate, as well as many more useful industry data, can be found on my website, BlackNote Investment. By 2033, the IT service industry revenues are expected to reach $1.06 trillion, increasing 1.83 times from the $578.1 billion registered in 2023 at a CAGR of 6.3%. We projected the industry's expected revenues 10 years from now, applying the expected growth rate of 8.7% and allowing it to slowly decline as the industry approaches the economy's perpetual growth rate, represented in this case by the USD risk-free rate. The industry is highly competitive and no company has a dominant position. The following table provides a snapshot of the top 20 companies in the IT services industry, accounting for 74.9% of total market share by revenues. Basing our assumptions on analysts' expectations and industry trends, we have estimated the future market share by 2033 for the top 20 companies operating in the industry and how their market position will change compared to 2023 levels. If you are looking for financial data to support your valuations, on BlackNote Investment, you can find the expected growth rate for 37 different industries used to forecast companies' future revenues. Additionally, the site offers useful data such as equity risk premiums for 39 different countries, used for calculating discount rates, as well as expected earnings growth rates for those countries based on analysts' expectations. Detailed industry and sector reports are also available, containing data like total revenues, total free cash flows, median operating margins, return on capital, as well as beta and financial ratios used to assess companies' risk. Feel free to use them in your analysis.